In this presentation, we will process payroll after having entered dental insurance employee paid after taxes. So we added a new item related to the dental insurance paid after taxes. Now we'll process the payroll and compare and contrast that payroll to the prior payroll, which had no dental insurance item within QuickBooks Online. Here we are. For more accounting information and accounting courses, visit our website at accountinginstruction.info. In our S-Corp paid payroll file, we're going to go down to the Workers tab on the left side. Within the Workers tab, we have our one employee. We're going to scroll back up top and run the payroll with that employee. We're going to change the dates up top. So we are now on April. So we're going to run this for the month of April. We've done January, February, March, and now we're going to process the new payroll. Here, we're jumping forward in time, so just be aware of that. We're going to enter the same information in terms of the hourly pay, or the hours, and the overtime hours to have the same calculation of the total pay. This is all we would really need to process the payroll, but now we want to see the detail by selecting the pencil to the right. As we scroll down, we see the hours times the rate gives us the current pay, and the overtime times the rate for the total gross pay, $4,062.50. This number will remain the same as prior payroll because we didn't make any change to the gross pay. We're making a change to the amount taken from it to get to the net pay for dental insurance. Then we've got the employee taxes. If we select the employee taxes, we've got the federal income tax, the $147.60. This is the one that could be influenced. This is one tax that could be influenced by insurance, but because we chose the option of it just being a deduction and therefore not qualifying for a deduction in taxes or having it be paid without being included within taxes, then this federal income tax should not be affected by the inclusion of the dental insurance the way we have entered it. So there are different options, remember, and we'll take a look at some of the more different options for health insurance, dental insurance, vision insurance that could have different impacts on federal income taxes. Social Security and Medicare, same things here. We're going to have the flat tax based on the gross pay. So the item that we entered this time should not be affecting these two as well. We'll not get into the state taxes here. We're in California, so the state taxes will vary from state to state. We're going to then go to the employee deductions, and the employee deductions will include the 401k we had last time and now the new deduction, so the $20 deduction. So in essence, this is just basically coming out of the net check. We're paying it for the employee. So this is another item that is being paid out of the gross pay earned by the employee, their money, which we're just simply taking out and paying for them to the dental insurance provider, hopefully providing some benefit in terms of possibly a group policy plan, lower premium cost possibly, and or just the convenience of being able to take it out directly of the check to provide to the plan provider rather than having the employee worry about that and make the payments and have another bill, to worry about outside. And then we have the employer taxes. These are what the employer paid over and above. The FUTA is now zero. It has nothing to do with the dental insurance. It's now zero because the employee has now hit the cap in our example problem. Then we have the Social Security and Medicare. These are going to be the matching that are being paid over and above. These are different numbers. These are matching numbers that the employer is paying. California taxes, and then we've got the company paid contributions. Selecting the company paid contributions, we only have the 401k. This does not include the dental insurance because we did not include that option. We're saying that the dental insurance is not something paid by the company over and above the payroll. We're saying it's part of the payroll that was earned by the employee that is being paid out of the gross pay earned by the employee. If we were to set up some type of insurance and say, hey, this is a contribution that's going to be paid over and above the gross pay, then it would be something that we might see down here in the company paid contributions and that would be a great thing because it's a benefit that the employer can give to the employee without it being included in gross pay, even though it's basically income. It's clearly compensation in some way if we're paying for insurance for the employee. That's because they're working there. We're paying them as we are with this 401k contribution, and it's not being included in the gross pay, and therefore we're not calculating taxes on that benefit they're receiving. So these are kind of the higher type benefits that a company can provide down here. So we're going to go ahead and say OK to process this. Here's a summary of our information. We're going to say this is check it. So we got the correct dates. We're paying it as of the end of the month. So we're paying it as of the end of the pay date. This is the range. This is the date of payment. Everything looks good. Everything looks proper. So we're going to go back down here and preview the payroll. And it looks good here. One more summary of it. We have the total pay, the deductions, the net pay, giving us a summary. If we want to see the detail on this screen, we can then select that pencil again and see that same detail. We're going to go ahead and submit the payroll. Then we're going to check the number, which I believe is 1004 now. And we're going to check out that pay stub. So this is what we'd have to provide to the employee, whether we give them the check or not. They have to see this information. So the check would be for $3,330.52, and that would be clear. They already have that, but we have to provide them the stub in some way so that they know what is being taken from them out of their gross pay. So in other words, this is their gross pay, the $4,062. These are the taxes that are taken out. These are the deductions taken out. The taxes summarized to the left, including federal income tax, Social Security, Medicare, and California taxes. These should not have changed from the prior check, and we'll take a look at that next time more closely. But the federal income tax, we entered the dental insurance as something that's not adjusting the federal income tax. Then we have the Social Security and Medicare, same thing. Our new item shouldn't be adjusting those. So if we go back up top, then where is that new item? Well, we have, this is the employee portion of the 401k, and then this is the $20 that are going to be pulled out. So this 203 and the 20 is this 223 that are other deductions that are being pulled out. These are being paid by the employee out of the gross pay earned by the employee and then being pulled out of the employee's pay to get to the net check. They're not being paid over and above that. Anything being paid over and above, as we've seen with the 401k plan, has a matching over and above this amount, is not being included basically in the calculation of the net check. For more accounting information and accounting courses, visit our website at accountinginstruction.info.